talking about Kotak Mahindra Bank.
Abhishek, right now, as you're speaking, Kotak Mahindra Bank's press conference has started. Let's go across to the management to see what they have to say.
And share with you our financial performance for the first quarter of this financial year. We will discuss key highlights and strategic initiatives of the bank during this year, as well as the quarter gone by. Before we begin, I'd like to extend a warm welcome to our distinguished speakers. I'll begin with Mr. Ashok Vaswani, Managing Director and CEO at the bank, Ms. Shanti Ekambaram, Deputy Managing Director, and Mr. Devangi Wala, our Group Chief Financial Officer. To ensure a smooth and productive session, please take note of the following. All participants will be on mute at the start of the conference. You may choose to keep your cameras on or off as per your preference. Our session will begin with an opening address by Ashok, followed by financial highlights presented by Devang. This will be followed by our Q&A session. I will join you back during the Q&A session. Without further ado, I'd like to invite Ashok to start our proceedings. Over to you, Ashok.
Thank you, Prasanna, and welcome everyone to this media conference. I think this was a very busy quarter for all of us at Kotak. And there are three big messages that I thought I would leave you with. Number one, it really is about unleashing the power of Kotak's financial conglomerative structure. If you look at what happened during the quarter, and if you look at the numbers year on year, at a group level, our profits after tax grew by 79% to 7,448 crores. Obviously, this was flattered by the sale of Zurich, and I will come to that, by the sale to Zurich, and I'll come to that. But even without the Zurich transactions, year on year, we grew by 7% to 4,435 crores. As you all well know, first quarter is usually a kind of soft quarter, but yet we demonstrated growth year on year to 4,435 crores. In this, the bank grew by 2%, but our subsidiaries grew by 26% year on year. And that truly is the power of having a financial conglomerate in multiple financial services business. The way we think about it, we have businesses in four areas: lending, asset management, protection, and capital markets. And year on year, all three of them, asset management, protection, and capital markets, have had an outstanding performance. Lending has been a little more subdued, and we will come to that later in my comments. The transaction which involved our divestment of the general insurance business was a big accretive transaction to our shareholders. We sold 70% of our general insurance business to Zurich Insurance for a total of 5,560 crores. The compounded growth rate of the investment over the time that we built this business would have been over 45%. Like I've always maintained, we will continue to evaluate our business from the eyes of the shareholder and what returns it can generate. This transaction not only demonstrates the value of our subsidiaries, both in terms of embedded value as well as the growth in value year on year on year. The other parts of the business continue to do exceptionally well, like I've talked about, and the results kind of show. Of course, Devang will take you through the numbers in greater detail. Point number two, regulatory confidence and remediation progress. As you all well know, and we talked about it in the last quarter results, the RBI order relating to our technology platform had quite an impact. We talked in the last quarter that it essentially has three impacts. One is a temporary disruption where we go from digital journeys to physically assisted journeys. Two, on our 811 business, and three, in our credit card business. First things first, from a technology perspective, we have made significant progress during the quarter.
Recording in progress.
We have made significant progress during the quarter. In consultation with the RBI, we put together a comprehensive plan to fix all outstanding issues. We have beefed up the internal team with resources from Accenture, Infosys, Oracle, and Cisco, and focused on relentless execution. I feel very comfortable and good as to where we are today. Still more work to be done, but very good progress. We have also appointed GT Bharat as our external auditors with the approval of the RBI, and they have already commenced their work. Needless to say, we are in constant communication with our regulators and keep them updated on all developments. As far as the business is concerned, obviously, it has had a muted impact on growth in our credit card business and in our personal loan business. Our 811 business, while it has a muted impact on new acquisitions, the 811 team has done a fantastic job in deepening relationship with its customers. 3, we laid out a strategy, and I talked a lot about it in the annual report, where we talked about fundamentally transforming for scale. And in transforming for scale, we said we're going to put the customer at the center of everything that we do. We have taken a lot of actions in this regard, and the 2 big initiatives obviously have been the One Kotak agenda. You've seen the power of our subsidiaries and how we get the subsidiaries to work together so as to deliver and meet the needs of our customers holistically. And 2, we recently have announced the reorganization of the distribution channel, where we are saying we want to bring together all the ways in which the customer interacts with us so that we are able to provide the customer an omni-channel, resilient, and seamless kind of interaction. Where we stand at Q1, I feel confident that we will continue to deliver for our customers and our shareholders. We are in a good position with a good platform, and the future ahead of us is quite bright. With that, let me hand over to Devang to take us through the numbers in detail.
Thank you, Ashok, and good afternoon and welcome all to the Q1 result call. Just taking from Ashok on the Zurich transaction, there are 2 areas which have impacted the Q1 financial statement, and I would like to elaborate upfront. First one, as Ashok said about the Zurich transaction, the above transaction has resulted in an increase in consolidated profit after tax by 3,013 crore and in bank alone profit after tax by 2,730 crores. So there are 2 separate effects, one in the consolidated result of 3,013 crore and in the bank PAT standalone 2,730 crores. The second area which impacted the Q1 results is the implementation of the RBI master direction on investment valuation, which has been implemented by the bank with effect from 1st April. This has also resulted in a post-tax gain of 3,414 crores. This is, of course, just the increase.
So that was the management of Kotak Mahindra Bank addressing the media about their first quarter numbers. But Abhishek, if you could sort of give us the key highlights of the numbers and tell us what went wrong for the bank this time around.
Deposit growth, that's the weakening point, Arundhati, with respect to what has gone wrong for Kotak Mahindra Bank. And that has also impacted the overall, net interest margin, which is at 8-quarter low. So a decline in net interest margin, despite improvement in CD ratio, will not go down well with the street. So if you take a look, net interest margin is at 8-quarter low of 5.02% when compared to 5.28% in the previous quarter. And YOY, it's a decline of about 55 basis points. Deposit growth is at 15.8% YOY and it's declined by 0.3% sequentially. So YOY, the deposit growth is the lowest growth rate that you are seeing in last 6 quarters, and it's the first time that we are seeing a deposit decline in Kotak Mahindra Bank on a sequential basis in last 16 quarters of 4 years. Advances growth is healthy at 18.7% YOY and 3.7% sequentially. YOY, this is one of the best growth that you are seeing in last 6 quarters. Now, operating profits, they are down 3.8% on a sequential sequential basis, and they are up more than 6% on a YOY basis. So YOY, this is the lowest growth rate that you are seeing in last 8 quarters. Core operating profit, if you remove the treasury part, the core operating profit growth is at just 11.5% YOY and a sharp decline of 7.8% on a sequential basis. So operationally, a very weak quarter with respect to P&L for Kotak Mahindra Bank, and provisions are up 58.8% YOY, and they are up almost 120% on a sequential basis. So that's another worrisome factor. They have had an exceptional gain, as the management did explain, of about 3,500 crore, which they got from the stake sale that they did in one of their subsidiaries. The PAT has come in at 6,250 crore, which is up 81% YOY and about 51.2% sequentially. If you remove this, exceptional gain and the tax also from it, it looks like it would have been around 3,500 crore kind of PAT for the company. However, take into account that analysts were pegging a 3,800 to 4,000 crore kind of a quarterly profit for Kotak Mahindra Bank. So operationally, it's a weak quarter for Kotak Mahindra Bank. The PNL, if you take a look, the NII is a miss by 3% to our poll. It's coming at 6,842 crore. We were working with a number of close to 7,070 crores, and they have given a PAT of 6,250 crores versus our poll of 4,000 crore, and that actually includes the gain that they have got from the stake sale. In terms of asset quality, in absolute value, gross NPA is up 3.8% quarter on quarter, net NPA is up 8.3% quarter on quarter. Looks like PCR might have declined on a sequential basis. As a ratio, both gross NPA ratio and net NPA ratio remain stable on a sequential basis. Back to you.
All right, Abhishek. Well, thank you so much for those details. We also have Rahul Malani of Sharekhan by BNP Paribas and market expert Prakash Diwan on the phone line with us. Prakash, an operationally weak quarter for Kotak Mahindra Bank. Their deposit growth was the biggest problem this time. What do you make of the numbers at first glance?
So, Arundhati, what you need to understand from Kotak Bank's growth trajectory, or the trajectory that they've set for themselves, is that it's a bank which is going through a lot of transition. Significantly, it is not just the top management, it is also an ideology, it's also a strategy of how to grow, where to grow. If you really see on the ground, the feedback that we have is that it's been going slow on lending and credit growth for quite some time. Now, the fact that deposit accumulation is getting difficult for most players, Kotak is also facing that because they've not been out there in the market with an aggressive way to garner deposits. So, somewhere it's a pause that they have taken by choice, and the numbers reflect that. So now, how long does this continue? What does it kind of lead to is something which we'll have to wait to understand from the management. But my sense is this was anticipated, a soft quarter, because it's not growing at the same pace as a Axis or an ICICI and even HDFC now. So from that element, it's good. But of course, that 35 billion INR one-off is what's kind of making things look up on the profit numbers. Otherwise, I think it's quite fairly tepid, and it will continue like this for some time. There's nothing which is changing in the current quarter to make it different. So I would believe the market will kind of, price that in as soon as it can.
Well, Prakash, to begin with, you said soft deposit growth, but look at the cost. Now, that's impacting your net interest margin, right? You are not growing the deposit, but your costs are increasing, and your net interest margin has come in at 8-quarter low. Sequentially, we are seeing a 25-26 basis point decline in the net interest margin of Kotak Mahindra Bank. Despite the fact that credit deposit ratio has improved sequentially, you have loan growth better than industry average. About 3.7% is the kind of loan growth versus industry average of almost 1% kind of a sequential YTD loan growth that we have seen. So do you feel that in case they choose to grow deposit to maintain their CD ratio, it will hurt them on net interest margin?
So, Abhishek, that's a valid point. It's not just the quantum of deposits, but also the cost of deposits that will have to weigh in. But my sense, if you look at the NIMs at 8-quarter lows, and while the advances could grow because of some sort of a legacy business which would probably be within the same client base that they've always relied on. And what I mentioned was I'm not seeing them go out in the market, seek newer relationships and grow that side of the credit book. So increasing deposits may solve their problem to some extent, but I would still believe it's not going to be so easy. The cost of deposit and to grow it at this cost only makes things more difficult for margins to settle at any higher band. We've seen how HDFC struggled. Kotak is also going through that with a different lag of maybe 2 quarters delay. But I would look at it only after probably September, where things could be different. But I won't get carried away by this huge expectation that the deposit costs would come down for them if they grow the size and the CD ratio becomes much more balanced. There will be some effort and time that will be required for that.
Well, Prakash, I'll come back to you with respect to HDFC Bank. Rahul Malani, we have on our show, who is from Sharekhan BNP Paribas. Rahul, what do you make of the numbers that have come in from Kotak Mahindra Bank?
So overall, as you discussed, as per our estimates, earnings excluding the one-off were broadly in line. However, the core PPOP growth was weak, led by higher than expected NIM compressions. So overall, normalization has been seen in case of NIMs, while core credit cost has been also inched up. So basically, it was a weak quarter on the operational front. In terms of deposit growth has come in at lower than expectation, but we were penciling around a 1 to 2% growth because of the RBI ban on the digital onboarding and deposits. A large part of shares of deposits come from the onboarding. So apart from that, after penciling that also, the deposit growth is weak. So overall, it's a mixed quarter for the bank.
Well, Rahul, as you said, it's a mixed quarter for, Kotak Mahindra Bank. Now, deposit cost, that's a worrisome factor, right? So, with respect to that, how would you look at valuation for Kotak Mahindra Bank now?
So basically, valuation seems to be reasonable, but overall outlook in terms of there are no re-rating factors going ahead, because the outlook on NIMs is negative at least for the next 2 to 3 quarters. And until and unless this RBI sanctions lifts up, there is you can at least grow the loan book via other portfolios like corporate or SMEs. But the major kickoff in the NIMs and growth will come from the unsecured, which they were penciling down to around they had targeted to take it to unsecured loans to around 15% of the overall loans. So basically, currently the outlook remains muted. So valuation seems to be penciling in all than that, but there are no re-rating triggers in the near term.
Right. So outlook remains muted over there. Rahul, Prakash, we have to take a break at this point, but please stay with us. On the other side, we will discuss HDFC Bank's earnings as well. Stay tuned to CNBC.